This is Chuck Rowe from Midway Studies Group. Thanks for joining again for another edition to our video series. When it comes to end of the year gifts, what can both donors and the nonprofit expect? Joining me today is Chelsea Chevelle from Bergen KDV. Thanks for joining today.
You're welcome. Thank you.
So we're nearing the end of this absolutely crazy year. People are starting to think of their end of the year gifts. Here are a few questions that I've been asked all the time, but I'm thinking that maybe a tax professional like yourself might have a better answers than myself would give. That would be my assumption, at least. So, anyways, here we go. Question number one for you is there seems to be confusion when a gift could be made for the end of the year. You have people that maybe come in January 4th and say, hey, here's my end of the year check I meant to give to you. When is the cutoff that you need to give your end of the year gift?
The end of your year gift needs to be made on or by December 31st. Has to be done in the calendar year to get the deduction for the current year.
Okay, so here's another tricky question for you is if, let's say, a donor decides to make a gift on, let's say, December 28th, and they put it on the check December 28th, they put it in the mail, but it doesn't arrive at the place till, let's say, January 2nd. Does it count towards the previous year then?
It does. Needs to have the date of the previous year and be postmarked by that. The recipient does not have to receive it by 12/31, just as long as the donor writes the check and mails it.
Perfect. And for a lot of people that are new donors, because a lot of people haven't donated before, and this might be the first year ever they made a donation, then they hear about tax credits, but what does that mean? Like when it comes to the percentage you might get back or you save on your taxes, how does that work?
Yep. So when you give a charitable donation, if you itemize your deductions, you get to reduce your taxable income dollar for dollar by that donation. So depending on what tax bracket you're in will depend on how much taxes you will effectively save by making that gift.
So as a professional, when you're doing somebody's taxes and you mentioned that it should be itemized, if they just give you a whole bunch of receipts and say, here you go, I can't imagine that would make your life overly easy. From a professional's point of view, what could someone do to help make your life easier as in regards to keeping track of those donations and keeping track of those receipts?
If you're computer savvy, put those in a list in Excel, have the donor's name and the amount and the date that you gave the gift. If not, even just put it on a piece of paper and just have all of those all summarized on one sheet, and then have all your receipts that you'll receive from those foundations or those organizations. You need to receive a letter from them saying you made a donation to substantiate that donation so you can take the deduction on your tax return. So you want to keep all of that together, your summary list, and then your receipts that you receive from the charity.
And something that people wonder all the time is there a certain level that you need to give each year to even be considered for a tax credit, or is it as simple as just $1?
So the Tax Cut and Job Acts of 2017 raised the standard deduction limit. So it was $6,350 for a single. It is now $12,400 for a person filing single. So that means you have to have $12,400 of deductions to receive benefit. Those deductions are a combination of your taxes, mortgage interest, and donation are and then any medical, depending if you get benefit of those. And then the married filing joint returns have a higher limit. They were $12,700. It's now $24,800. One thing that did change though with the CARES Act, that the Coronavirus Aid, Relief, and Economic Securities Act, is there is now a $300 above the line deduction for per individual for charitable donations. So if you're married filing a joint return, both you and your spouse could give $300 to a charity, and you would receive a $600 above the line deduction. So you do not need to itemize to receive that deduction. That is new for 2020.
That's great to know. And to be honest with you, I would never have known that. So thanks for sharing that. And another tax credit that people wonder about is with community foundations. In our state, where we happen to be in Iowa, but this happens in a lot of states as well. But in Iowa, there's a state tax credit when you donate to a community foundation. This year's tax credits have already been used up, so they get put on a list for the following year. Is a person ever told, no, you're not getting a tax credit? Because I know people get worried about that. Or do you just get pushed year to year until finally that tax credit is open for you?
Yep, you'll never be told no. You'll just be added to that list, and eventually your name is going to come up depending on where you are in that list, but eventually you will get that credit. It won't always match up with the year you made the donation, but at some point you will get that tax credit.
Now, here's a question that both of us probably get all the time is, when it comes to volunteering, can someone trade in their normal labor charge for tax credits?
Unfortunately, no. The time that you volunteer is just volunteering your time. There is no tax deduction for your time.
Okay. But on the plus side, it's probably extra points for heaven. So
it is.
Right? There you go. Yeah, you win somehow. So but another way people make donations is going to be through physical items. A lot of people go to a thrift store and maybe donate some items to them. I guess my first question in regards to that has to do with the receipts. How important is it for someone to hold on to a receipt for something that they donated?
It's very important. This is one of the places that the IRS will come back and scrutinize and make sure that you have the receipts. And which makes sense, because someone could say, oh, I donated 100,000 worth of stuff. Well, did you really? And the value to you is not really the value to that organization. So it's having that receipt to substantiate that value.
And when someone does make the value, I believe that it's the person who made the item, that donated the item, that determines the value for what the receipt should say. Is that correct?
It is, but most, like say Goodwill, for instance, they have a list that gives a recommendation based on the item that you gave, what that value should be.
So then what would be the fair way to figure out what the value is? So some people believe that you should just, whatever I paid for it is what the value is, or should you be considering depreciation over the years?
It should be a current fair market value. So what is it worth? It's not your purchase price.
That's a shame too, because I'm sure a lot of people spent thousands of dollars on that new item once upon a time. So
right, but you got benefit while you owned it, so it's not worth what it was when you originally purchased it.
You bet. So, well, and then when it comes to holding on to those receipts, whether it be for a donated item or for a monetary donation, how many years does someone need to hold on to that receipt for?
We recommend 7 years.
7 years. That's a lot of paperwork to hold on to, but for good cause, right? So
right.
Okay. So, well, let me ask you this one last question, and that is, when it comes to making an end of the year contribution, or even a contribution throughout the year, do you have any final kind of tips or pointers or suggestions for someone who's making that donation?
A couple of things you could consider. If you are over 70 and a half, you could do what's called a qualified charitable donation. And this would be a donation directly from your retirement account. You would direct the administrator of that to send the money directly to the charity. This would take that IRA, for instance, if it's an IRA and you need to take a required minimum distribution out of there, you could instead have the custodian send that directly to a charity. That gets the money to the charity, and that removes that income from your adjusted gross income, which could then in turn reduce the amount of your Social Security that's taxed and your future Medicare premiums that you would potentially have to pay. So that is one thing that we see our retired clients using a lot, is just doing a qualified charitable donation directly to those charities.
And
Again, you cannot receive the money. It has to go directly from the custodian to the charity. And you want to
it
make
doesn't need to be paid back.
correct. Nope. It's just another way to make your donation. You're doing it directly from your IRA instead of getting the cash and then giving them the cash.
Now,
It's a win-win for both the taxpayer and the charity.
now that's some great advice. I'm not even going to add any questions on top of that one because I wouldn't even know where to start. But anyways, that was some great sound advice. What else can you think that comes to mind for people to keep in?
The other thing that people have done with the increased standard deduction is they've considered bunching donations. So if you were close to that limit of being able to itemize, maybe you throw in 3 years worth of donations to the charity today, and then you don't give for the next 2 years because you just gave 3 years worth at once. And then that would get you over that limit for this year. And then you could take the standard for the next couple of years. So they call that bunching your donations, is another thing people have considered.
So just to be clear on that, what people are not doing, and I just want to be clear, is that they're not taking past donations that maybe they didn't claim before. They're not saying, well, I gave 3,000 2 years ago, 3,000 last year, and 8,000 this year, and now I'm going to put it all together for 1 year. What they're doing is they're saying, let me prepay almost in a way my donation for the next 3 years. So it's one big chunk.
Correct, because you still have to show that you gave that donation in the current year. So you'll need that letter from the organization saying you gifted $12,000. So it does all have to be done in one calendar year. Does not have to be done at once, but throughout the year, that calendar year, it does have to be done. You're correct. And then some people will let their charity know that they're doing that. For instance, your church, if you're going to give $12,000 this year, and then you're not going to give for the next 3 years, give your church a heads up and say, hey, I'm prepaying my donations for the next 3 years. So that kind of helps them plan a little bit also, like, oh, Chelsea gave us $12,000. Hopefully she gives it to us for the next 3 years, and then that's not your intentions.
If people wanted to get some more tax advice and figure out how maybe Bergen could be of service to them, what's the best way to get a hold of you?
The number you could call is 319-234-6885, and you could ask for Mark or Crystal, and then they would get that process started and see if that's a good fit.
Well, Chelsea, thanks so much for joining. Really appreciate it. I mean, I obviously knew all these answers myself, but
For sure.
so thank you so much. And in all seriousness, this was a big help, though. Thank you.
Yep, you're welcome. Thank you.
And for everyone else, thanks for joining us yet again. Chuck Rowe from Midwest Studies Group. Catch you next time.